Warren Buffett has been investing for over 80 years. His net worth is over $100 billion. He has one investment rule he puts above everything else. And most people completely ignore it. Today, I'm breaking down that rule, why it works, and how you can apply it starting today, even with a small portfolio. Rule number 1, never lose money. Rule number 2, never forget rule number 1. That's it. That's the rule. And it sounds almost too simple. But the depth behind it changes everything about how you invest.
Buffett isn't saying losses never happen. They do, even to him. What the rule means is, never take risks where the downside could permanently damage your financial position. It's the difference between a temporary market drop, which always recovers, and a permanent loss from a bad investment that goes bankrupt. Most retail investors lose money not because markets go down, but because they panic sell during drops, or they bet too heavily on speculative investments that never recover. The rule is about protecting your capital so it stays in the game long enough to compound.
Buffett only invests in businesses he deeply understands. If he can't explain how a company makes money in one sentence, he doesn't invest. He buys companies with durable competitive advantages, what he calls economic moats. Think Coca-Cola's brand, American Express's network, Apple's ecosystem. He buys when there's a margin of safety, meaning he only pays when the price is significantly below what he believes the business is actually worth. And he holds for decades. Time is what makes great investments reach their full value. You don't need to analyze individual companies to apply this rule. Here's how it translates to everyday investing. Don't speculate with money you can't afford to lose. Crypto, meme stocks, options. Keep these below 5% of your portfolio if you use them at all. Don't panic sell during market downturns. A paper loss isn't a real loss until you sell. The S&P 500 has recovered from every single correction in history. Diversify. No single stock should make or break your portfolio. Invest only in things you understand. If you can't explain the investment in simple terms, it's too risky for your core portfolio. Buffett's real superpower isn't stock picking. It's patience and discipline. Refusing to make stupid decisions when everyone else is panicking. In 2008, while the market crashed 50%, Buffett was buying. In 2020, while everyone was selling, long-term investors who held were rewarded within months. The rule, never lose money, is really a mindset. Protect your capital, think long-term, and let time and compounding do the heavy lifting. Never lose money. It sounds simple. Living it is where most people fail. Apply this rule to every investment decision and you'll automatically filter out 90% of the bad ones. Subscribe for more investor mindset breakdown. And comment below. Which of Buffett's principles do you already apply?